Wages growth has stopped cooling and is expected to strengthen in 2018 as the labour market tightens, according to an upbeat assessment of the economy by the Reserve Bank of Australia. While spending by heavily indebted households dealing with weak wage growth remains a source of significant risk, unemployment has fallen to a 4-year low, board members said in the minutes released on Tuesday of this month's board meeting 2 weeks ago. Although wage growth had been a little lower than expected in the September quarter, it appeared to have stabilized at a low rate, they said. Leading indicators of labor demand had been broadly consistent with continuing strength in the labor market. In these circumstances, spare capacity in the labor market was expected to be absorbed gradually and wage growth was expected to pick up over time. The final official communications from the Reserve Bank for 2017 leaves policymakers pretty much where they have been stuck for most of the year, balancing the need to keep downward pressure on the currency to spur employment growth by signaling no rate hikes, versus adding to a household debt binge through further easing. Jacob Grieber reports. Australian shares are higher at lunch, with all sectors in positive territory and oil and iron ore companies particularly firmer following strong overnight leads and strengthening commodity prices. The benchmark S&P/ASX 200 stock index was up 0.49% at 6,068.4 points at midday, led by gains in the miners, healthcare and energy producers. On a slow day for local data, investors took their morning cues from overseas markets which were almost universally upbeat. U.S. investors are primed for the midweek U.S. House of Representatives and Senate votes that could have lawmakers placing the tax bill on President Trump's desk for a signature ahead of Christmas. Strength in commodities, particularly iron ore, flowed through to local markets, with BHP Billiton up 0.8%, Rio Tinto lifting 0.4% and BHP's spin-off South32 climbing 1.4%. The energy stocks, Woodside Petroleum and Oil Search, gained 1.7% and 1.3%, respectively, as Brent crude prices lifted overnight. Aussie healthcare stocks with US exposure were stronger at noon. CSL and Cochlear were both 0.9% higher. The major lenders also began to climb late in the morning, with ANZ, which has its annual general meeting on Tuesday, leading the pack with a 0.8% increase. Commonwealth Bank, Westpac and National Australia Bank, which has repaid $1.7 million in wrongly charged mortgage interest to nearly 1,000 customers, were between 0.2 and 0.6% higher. Investment bank Macquarie was moving back toward the $100 mark at lunch, up 80 cents, or 0.8%, to $99.49. Elsewhere, the retail food group has continued its fall to near 6-year lows, with the Gloria Jeans and Doubt King brands owner down another 15.1%, at $2.25, after saying it expects first half profit to be 34% lower than last year. Meanwhile, a resilient Australian dollar has held its own and even edged higher against a US dollar, taking a break from its recent tear.